Hello, welcome to our today's webinar. This is Abid from Brokery Solutions. Brokery Solutions is a technology provider for brokers. We've been in the market for the past 13 years, providing brokers with the best technology. Our flagship products are social trading, copy trading, which will be the topic of our webinar today. We have PAM, we have Propulse, and many other solutions that brokers usually use. In the current time, we have over 300 brokers using our copy trading. So most of the features, screenshots, if they seem familiar to you, this means that your broker is using our platform. If not, you can check. Most of platforms are similar with different features. So if those features seem similar to you, you can still use them. We will start with our webinar with today's agenda. We're going to take it a bit slow at the beginning just to allow people to log in and join us. We're going to start with copy trading for beginners, what it is, how it works, and common questions traders and IBs ask. Selecting the right signal provider, important performance metrics, including drawdown, profit factor, win rate, and using the ratings module. How to copy top traders and earn more in 2026, risk management strategies, and the IB opportunities. To start with, we're going to start with copy trading for beginners. What is copy trading? Copy trading is a solution where traders start using to copy professional providers, signal providers. Those providers, they do their regular tradings, and then the traders start following them on a platform such as social trading from Brokery, and they start copying their trades that they open. How it works. We start with our how it works on our platform. On our platform, we have a ratings module where you choose your signal provider. It's a system where it allocates all the signal providers, and basically it shows those signal providers according to, you can filter, and then you can choose your signal provider according to their performance, to their drawdowns, and other metrics that we will be discussing later on. You can, and then later on, you have to set your investment and risk management tools, risk management limits, and then you have to activate your subscription. And then after activating, you start copying the trades. And then we have what traders are asking. We've created a podcast, me and my colleague Paulina, from 4 episodes. I will be sharing the link on the live chat for you guys to pay a visit to this YouTube series where we discussed the most asked questions by traders through Google and other platforms. We've created a 4-episode podcast where we discussed Paulina was asking those questions and I was answering from the technical platform and technical side of those of the answers of those questions. So the risk nobody warns you about. We're going to start with the execution latency. Execution latency is when it's basically the difference in execution time between the provider and the trader. When the provider opens the trade, those even sometimes milliseconds or seconds they generate difference in price, difference in trading conditions between the provider and the follower. So it's very important to understand what is the engine that your broker is using. For example, our engine, we have 2 sorts of engine. One engine can execute 10,000 trades per second. So if the provider opens the trade in the same exact second, 10,000 trades will be executed at the same time. And the second one, the second sort of installation would would execute 6,800, around 6,800 per second. So it's very important to understand what's the latency. So you'd understand the difference in price you'll be getting from your provider. Those seconds can be vital in some cases. And if the provider is using a weak engine, that could be extended to 5 to 10 seconds. It depends on the engine and on the pressure on that provider. The scam providers. The scam providers is, as I mentioned at the beginning, we have our platform called ratings module. So on the ratings module, all the providers are allocated. All the information are reflected from their trading accounts. So you can basically view all of their performance. You can view all of their returns, all of their profits, all of their how long have they been on the platform for, etc. So it's very important to look into those details closely and to really adjust them before subscribing into a provider, because it's easy to basically have high profits but very high also max drawdowns. So we will dig deeper into that in the next slides on how to choose the safer options. And then we have the over-concentration. Over-concentration is basically when a provider is concentrated on certain instruments instead of diversifying. So it's better to find diversification in your providers. Moving to our first pull for today, I will launch the pull and give you 30 seconds to answer the pull, and then we can discuss it. The pull is now launched. Okay, so to discuss the first one, what's the first thing you look at when choosing a signal provider to copy? We have the highest at total return, return on investment, the second highest max drawdown. So okay, yeah, very, very reasonable. Actually, they vary both in relation, number of followers, the least, and then we have how long they've been trading. I would actually put them in the same order. Total return, max drawdown is as important, and how long they've been trading for. Okay, so we'll move to the next slide. And selecting the right signal provider. Performance metrics, red flags, and how ratings module gives you the edge. We have the why most traders pick the wrong providers. We have the do's and the don'ts. What things to do to evaluate risk-adjusted returns, to check consistency over 6 to 12 months, match strategy to your capital and tolerance. And the don'ts are to chase the highest risk returns on investment, follow the most popular trader, ignore maximum drawdown. This is exactly what I meant at the beginning when I said pay attention to their ratings module profile, pay attention to the details that are projected there, because it's projected directly from their trading account. Our platform is connected directly to the trading platform, and it reflects all the information from the trading platform. So you might find high return on investment, but you might also find very high maximum drawdown. And this is something that you would like to avoid. The things that you should focus on is more stability. So to evaluate the risk-adjusted returns, and then to look at the consistency over, and the platform gives you the graphs per week, month, 3 months, 6 months, etc. So you can still also check over time, because the platform, the numbers, the end numbers, you see the end result or the average number. So the number might be higher due to high period, but the rest of the periods were actually down. So it's better to check over time and then to match this strategy to your capital and tolerance. If you see that a certain provider trades with certain instruments that don't match your capital and tolerance, that could be a wrong choice for you. So one extra information, and now we'll get to the user interface of our platform of ratings module. It's very easy to read. Information is very accessible. It's out there. It's easy to read. Graphs are in green and red, and it's just very user friendly. So moving to the 5 metrics to understand before following. The 5 metrics, let's start with the first one, is maximum drawdown. What's the to check what is the max drawdown for each provider. The win rate is very important, their profit factor, and also to track record duration and the average trade duration. Sometimes you would get into the ratings module and you'd think that you need to make a decision by starting to follow the provider now. You don't need to do that. You can set them on a watch list and set them in your watch list. It's like if you're going to compare it to a shopping experience, for example, you can set them to a cart and set them in the cart for like a week, 2 weeks, 3 weeks, and then check their performance overall during that time and check those metrics. Check their maximum drawdown. Is it increasing? Is it decreasing? Is it available? Is it stable? Their win rate, their profit factor, and many more information. Again, very easy to track, very easy to access. And if the information reflected makes sense to you and suits you, you can start following that provider. And that would get you to making a better decision and more aware decision. So an example of understanding how a drawdown work. We have now 2 scenarios, a trader A, the smooth operator, and we have the trader B, the roller coaster. And the roller coaster, if you see that the annual return is 120%, which gives you a high number, a high percentage, but the maximum drawdown is 68%, which makes him a high risk appetite, which makes following this provider is a high risk because they may be making high profits, but also they do have high max drawdown. So that's something we should avoid. The smooth operator, on the other hand, has much less, has a 45% positive annual return, but have 12% only maximum drawdown. So that's what we call a low risk appetite. Moving to the ratings module, and this is the widget of ratings module. This is how it looks like. As you can see, we have Jane. You can see the total profit. You can see the average profit. You can see the return percentage. You can see all the information. And this is how the widget looks like from the outside. This is without accessing Jane. If you press on Jane, you'd access Jane's profile and you can see much more information, from instruments to profitability to graphs, to every detail that is reflected from their trading account, how many days they've been trading, and how many days they've been trading. As you can see here, it's age by days. So you can see the number as it shows. As here you see John is 3 days, for example. We have James here 1,230 days. These metrics are important, as we discussed in the poll. The answer was, if we go back to the poll, we talked about total return, the highest numbers, max drawdown, and how long they've been trading. How long they've been trading is an important factor because it gives you stability and it gives you more to look into. So you can basically look 1 year back. The one with 1,200 days, you have 3.5 years to look back, almost 4. So you have long time of metrics to have view. It comes in two shapes: the card and the vertical shape, but it's the same. It depends on the broker and how they would like to set it up. Uh, Also, you can track, as I mentioned, the wish list. As you can see, the heart on the right side, or in here, uh, it's also on the right side. But as you can see, these three were listed in the wish list. This one wasn't listed in the wish list. So that's how you can view the difference between them. Now for the pull number 2, I launched it by mistake, so we can just view the votes and discuss them. We have the have you ever stopped copying a trader? If so, why? We've got the highest. Their drawdown scared me. That's one of the most important we've discussed. The second highest, I found someone with better returns. Okay. Uh, my results didn't match their slippage timing. That's the second. The lowest, actually, I've never stopped copying a trader. Okay. Maybe it's your time. That's exactly this webinar is exactly for you. Is targeting you. It's the 6%. Going back to the presentation, and how to copy top traders and earn more in 2026, risk management strategies and the IB opportunities. So just before we carry on, a quick disclaimer: Brokery Solutions builds copy trading technologies for brokers and does not provide trading services for individual traders. This is an educational session and should not be considered financial or investment advice. Always check with your broker regarding available services, supported instruments, and regulations in your jurisdiction. So moving on, we get to the risk management, your non-negotiables. What are the points that you shouldn't negotiate? You have to have them, otherwise you shouldn't proceed. To set your subscription strategies and risk management is very important. This is, I see it as number one, actually, because once you start following a provider, it's immediately in our platform. I'm talking now from our side of the platform. It takes you immediately to the page where the subscription is inactive, and you need to set up before activating, you need to set up your subscription strategy and to set your risk management on when to stop this subscription, how to scroll. We will discuss it now further, but basically a stop for your following for this provider, or you set actually the actions according to your profile that you set. Choose how to copy volumes are calculated. So this is the copying strategy. We have 4 copying strategies. We have the auto scale. As you can see, it's the proportional to your account size, the multiplier, fixed, and the lots proportion. I believe the names are very easy also. Again, in the user interface, everything is very user-friendly. Even if you're a beginner, even if this is your first time hearing of trading or going into the user interface, every little information is described underneath every parameter, every section. So, for example, choosing a strategy mode, choosing a subscription strategy, you will pick auto scale. You will have auto scale underneath described in a very simple language, where you can, as a trader, understand exactly what you're choosing, and then you can choose the rest of the parameters accordingly. Clearly understand volatility ratio and return volatility, and then set a maximum open volume limit to prevent accidental overexposure. Risk management tools. The risk management tools, where you can create a risk management profile. Risk management profile, you set your threshold, you set the action, whether to put the subscription on hold, set the subscription, keep the subscription active, set it on hold, or cancel. And then what happens to the trades? Keep them all open, close all trades, close unprofitable, or close all unprofitable. So, and all of those informations, by the way, are they can be edited. So you can set a uptight risk management profile, and then you can go back later on and you can edit it to a looser risk management profile. You can start with auto scale and then switch to multiplier if you notice that the provider is opening less or more volume that you'd wish to open according to your assessment and your capital at the moment, or at the time you started following another provider to diversify your capital and investment. So you decide to go to lower your investment with a certain provider. So all of that, you can go back to the provider and you can edit your information and then go live again. And as well, the very important note here is that those setups, they're done to each and every provider separately. So if you have provider A, provider B, provider C, you have to set up provider A and provider B and provider C, and you can choose different measures to take into the three providers. So I'm going to launch the pull number 3 now. We're almost finishing. I'm hoping that towards the end we'll have a few minutes for a quick Q&A as well. If you have questions, we can where we can discuss. If you don't have if you have more questions, please feel free to send them to us at info@brokery.com, or when you visit the podcast series, you can leave comments. Or you can leave your questions on the chat and we'll respond to them with another podcast or in our next webinar if I don't get the chance to respond to your questions. So far, we have I set how do you manage risk when copying a trader. So far, I set stop loss limits on my subscription gets number 1. Number 2, I monitor manually and disconnect if things go wrong. You have the automated version. And then we have the third one, I don't actively manage risks. Oh, that's risky. That's very risky. And then I diversify across multiple signal providers. Okay, that's nice. I think we should move on to the next slide. And then here we're going to discuss the IB opportunity. Why does copy trading important to IBs? Because it's easier to convert new traders, lower entry barrier into referred clients. Referred traders who copy trades stay active longer and generate more trading volume. Because if you have a few traders that are like a bunch of traders that are beginners, if they start trading by themselves, the probability for them to do higher risk moves or stop is higher than following a signal provider that is equipped, that is professional, that has a good history, that will make them open more trades with higher volumes and would make them last longer and generate more profit, which would sustain the opportunity for you. Use ratings module to show a quality trading environment and technology. If the IB was also a provider, they can use the ratings module to show their abilities on the trading on the ratings module. Hence, everything is reflected from the trading platform to the ratings module. Attracts passive traders who would otherwise never open an account. So the passive traders that would never open an account, it's easily to attract them to copy trading. And the takeaways from today's webinar is copy trading replicates expert trading trades automatically, but it's not set it and forget it. So with copy trading, yes, it does copy your trade, but it trades, but you need to make the right choice, observe, and then follow up with the provider to change your setup according to their performance as well. So if you notice that the maximum drawdowns are increasing, you increase immediately, or you decrease your threshold. So you increase your safety guards, you increase your risk management tools. And it goes to all the other scenarios with observation. Uh, Always evaluate providers on drawdown, profit factor, and track record length, not just return on investment that we just mentioned. Use equity stop losses on every copy relationship. Every provider, you have to set a separate risk management profile. When you set a risk management profile for one provider and then start following other providers, it does not apply to all. You need to set one to each, and you can edit, delete one at a time for separately. Diversify across 3 to 5 traders who trade with different assets. It's always better to diversify your with signal providers. You also notice it on ratings module that each signal provider is like an expert with certain instruments. So it's recommended that you diversify those instruments and those providers and your capital amongst 3 to 5 traders. Use ratings module to understand signal providers' performance and make informed choices. Using ratings module, we've discussed how to use it throughout the webinar, how to set on a wish list, how to read it carefully, take your time with it before you subscribe. Understand different trading styles. Different trading styles have different risk profiles. Ratings module helps you compare as well. For IBs, brokeries, social trading plus ratings module will get you more tools and volume. I think for now we move to the Q&A. So please, if you have questions, feel free to send them to the chat. I will be answering the questions. I had tried copy trading, but I get lost. I'm assuming, Rahil, you meant lost. As I explained, first of all, check with your broker if they are using social trading from Brokery Solutions. If they are, then our user interface is very user-friendly. When you start with ratings module profile of the provider, you follow the steps that we've mentioned today. It should be very easy and accessible for you to follow without any constraints, without any complications. We have another question from Dev. Can multiple strategies be copied on one account? Yes, Dev, they can be copied in one account. You can connect multiple trading accounts even into one user interface account, and you can follow more than one provider. Can I copy trade without ever becoming a trader? You mean a provider? Yes, you can copy trades without trading on your profile, or have when you register into the platform, register as a follower, not as a provider, and that's how you just be a follower. Ahmed has a question. Can you send a direct link for copy trading of your community? You can visit our website, brokery.com. I will write it in the live chat, and you can visit our website and you will find all the information about our social trading and many more investment tools that we offer. We have many more questions, but I'll pick one before we have to end our session today, and the rest of the questions we'll make sure to write them down, have them down, and prepare to you another podcast episode so we can answer all of your questions in depth. Why is low latency important in copy trading? Low latency is very important because it takes the time that is the difference in price, especially when the market is acting fast. If your provider opens a trade at 3:01, for example, 01:10, And that 1 or 2 second latency is very important because the price might majorly be different. So your provider will end up opening at a certain level of profit and you'll end up opening at a different level of profit. So latency is very important and engine is very important. Thank you so much for attending today's webinar. Thank you so much for being active, and hope to see you in our second webinar. We will be announcing when it's going to be. It's a series of webinars, so we will have second, third, and fourth webinars. Soon we will announce the topic, and we will also share the registration links. Thank you so much, and we'll hope to get see you soon. Bye bye.